Hey, what's up, good people? How you doing? Welcome back to Stock Up with Larry Jones. You already know. Follow the prompter, hit the like, subscribe, and notification bell. If you are subscribed to me on your cell phone, when you get home to your computer, make sure you select all so you can get all the notifications. Anything I say is not a suggestion for you to buy, hold, or sell. Make sure you do not fall for spam in the comment sections. Never send money or crypto to anyone, not just on my page, but anybody's page. Let's talk about what's happening with the stock market today. The market giveth and the market taketh away. Let me just break it down in layman's terms. You got drunk, you went to the party, you saw the girl. When I say you, I mean the stock market. So the stock market got drunk, went to a party, saw a girl that he thought was fine, and the stock market is just drunk, wasted. And, takes the girl home, finds out everything is fake. The hair was fake. The the boobs are fake. The butt is fake. And now here we are the next day when you wake up and you find out that it's not what you thought. And now you're having regrets. I'm just trying to break it down, good people. That's what's happening with the stock market right now. It was news after news after news when the Fed was talking. And remember, the longer the Fed talks, the more dangerous it is for the market. It's just played out too many times. It's like I've read this story. I know how it's going to end. I heard this song. I know how it's going to end, and I can almost guarantee you, one of the Fed board members, one of the state by state Feds, there's going to be a loose Fed that's going to be talking, and that Fed will be more hawkish than Jerome Powell was even yesterday, causing more volatility. Listen, I'm going to reiterate this. 6 weeks. 6 weeks is we got more volatility happening over the next 6 weeks. Look, the next Fed meeting is June 14th and 16th. June 14th and 15th, I'm sorry. So June 14th and 15th, right? And so I still say, like I've been saying, that we will, I believe, see the greatest volatility in this period, all right? And so just remember this red suit when you get ready to load up and you go, hey, I'm going to load up. You're like, Larry had that red suit on that day. Just as a reminder that you better be a great stock picker. And let's tell the truth, most of us are not. And so what is the best thing to do? Me personally, I'm just cashing up. That's all I'm doing, mostly cashing up. I made a few moves, like I said yesterday, and they were both in crypto. I didn't buy any stock. Even during this news, I didn't buy any stock. I bought a little crypto. I bought a little SHIB, and I bought a little Solana. All right. You guys know we wait till Solana comes down. All right. So I didn't buy any Solana yesterday, but I bought Solana when it went down to under $88. So that's where we purchased Solana at long term. Bought a little SHIB because it was quad 020. And remember, that's a penny bank for us. We are not chasing speculative stock. Let's get back to the matter at hand. You guys know that song. All right. So I took a few more notes here. I just want to get this one out early. Because the market is down, I am going to personally do my $5 a day on today because these are the days that we dollar cost average in. So if you haven't did your $5 a day in the last 2 weeks, today is a good day to do just for the 2 weeks. I did last week, and for this week, I'm going to do today because the market is actually where it was a day before the Fed meeting. Let's take a look here. Look at here, good people. This is the fourth, right? This is the Dow. We're just going to look at the Dow, right? So here's the fourth, right? That's the third. Here we go. Where's the fourth? Right. Here's where the fourth is, right? So let's move this over. Right here. This is where the fourth starts. Let's do this. So now, here's where the fourth is. Oops, sorry about that, good people. And as you could see, this is the fourth, And this is where we started. Look at what happened. You guys remember yesterday, it went down a little bit. The Fed started talking. You start having these green candles and the market ran up. You guys remember. And where are we right now? Right back where we was before the Fed meeting. So this bounce and then down. I can tell you a lot of people made money on this. Smart stock pickers and day traders made money on this swing and got out and got back in, right? So here's where we were before the Fed meeting, and here's where we are after the Fed meeting. So it literally, look at that, gave it all back. And as you can see now, we will probably end up flat. And so that's what I want you guys to understand, that to me, this is all a cyclical game. It's a cyclical game, Game, all right? And it is crazy. Let's look at what's happening today. This is what's happening today. Look at the S&P and the Dow. Just down 3%. The S&P 3.5%, and the Dow's down 3%. And you know, it's just one of those things where it's just, you know, the market giveth and the market taketh away. As you can see right now at the time of this recording, the look at that, down 1,000 points. Look at that. And that's what it is, good people. The market got over joyful yesterday. It just got very bullish yesterday. And now we find out that the dude that you thought he was, he's not. You know, the girl that you thought she was, she's not. And everything is coming out now. And now you're sober. And now you're having the regrets, right? You guys that party all the time, you know exactly what I'm talking about. Number one, stop all of that drinking. All right. So this is what I see over the next 6 weeks. It is just one of these things that we have to exercise patience, right? So stock with the high multiples are the ones that are going to continue to get beat down the most. Remember that. Look at your multiples of the stock that you have. And I'm going to say that the ones with the high multiples are going to get beat down. Tech is getting beat down the most, have been. But I believe that the entire stock market is going to overcorrect. All right. That's what I believe. So what I mean by that is it's going to oversell. And some of these multiples not only will go to fair, but they will go to oversold, right? Or undervalued. And then that's when smart money is going to come in, right? And start buying a lot of this stuff up, right? And so another thing, I'm looking at some notes here. Let's talk about forward guidance, right? So a lot of these companies are reporting what's called forward guidance. So in these earnings calls, these companies will come and let's say the company has a good earnings report, right? They beat what? Expectations. So the expectations are set. And if the company beat the expectations, then they have a what? Good earnings report. If they come under expectations, then they have a negative a reaction, right? And the stock's supposed to sell off, though that correlation hasn't been correct this year. So what a lot of these companies are doing, they're reporting weaker forward expectations, right? They're reporting weaker forward guidance on purpose, good people. They're doing this on purpose. So, and why would they do that, Larry? So if I'm a company, I'm the CEO, and I report a weaker forward guidance, meaning, yes, we did good in spite of the supply chain, but we're expecting more problems down the road. So what that does is it sets a lower expectation, right? So now if they lower the bar, meaning don't expect us to knock the ball out of the park next quarter. So now their forward guidance, they're setting the bar lower. And so that way they could what? beat expectations, and then it makes the company look good, right? And that's happening across the board. You have these CEOs on these companies say, hey, you guys did good. You guys did good. Apple, for one, you guys did good. And then on the earnings call, they go, yes, we did good, but we expect turbulence coming up, because of the lockdown in China, which the iPhones are manufactured over there. And, we're having, inflated costs, and we're waiting on parts, and we're waiting on production because of the shutdown. We don't expect to sell as many iPhones. I'm just giving you guys an example. And that lowers expectations, right? And so now to beat the street, or to lower what the expectations is, and then if they come in higher, it makes them look better, and it's actually better for the company. So expect a lot of low forward guiding reports from these companies. And if you look back at the earnings reports from last week, the bigger companies, that was a theme that was just constant across the board. All right. So I just wanted to give you guys this information right now. Listen, if you are doing the $5 a day challenge, I'm encouraging you to do $15 a day, right? And all you have to do, I'm going to leave a playlist here. All you have to do is pick one stock per portfolio. I got 3 portfolios that we are going to buy through. We're going to buy through this market. We're going to buy through the recession, and we're going to make a killing. The further away we get from the recession, you're going to see some of these stock go up in multiples, 100, 200, 300%. But what we need to do is to DCA, continue to dollar cost average, and especially on red days. So I'm going to do mine personally soon as I finish this, okay? Excuse me, good people, losing my voice. Make sure you check out these links below. You guys know that with Moomoo, which is the new app that we're using, we are just putting money away in that Moomoo account. So continue to download my link below. They're going to give you guys some free stocks. Deposit $100 in there. And that's where we're getting ready for the upcoming recession. $5 a day in there if that's all you can afford. $10, $20, $30, $50 a day in there. And that money has zero risk because we're not touching it. We're just getting ready to kill it. Okay? That's what I want you to do with Moomoo. If you're swing trading, you guys know that's what we do with Webull. Download that link. 1 penny deposit, and then they're going to give you up to $9,600 in free stock. So that's what I want you to do with the 2 links below. Make sure if you're not taking the Larry Jones $5 a day challenge, I'm going to leave a playlist right here. I want to get this one out early so you guys could govern yourselves accordingly. All right. Sorry, my voice is going out. I love you guys. Live, love, laugh, and learn. Hey, I'm sorry. I can't even call this how the market is going to end today. Right. It could go even redder, or it could have a slight rebound. I'm hoping the latter of the two. And be careful and have an ear out for a loose talking cannon, which will be another Fed member that is even more hawkish than Jerome Powell. Peace.